average sales prices climb and start matching the other upward trends we've been seeing for the past few weeks. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, April 12th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos, so that you can know how the market is impacting your options as a homeowner or someone who is looking to buy a home. Let's take a look at how the market performed this week. There are now 28 homes active on the market, which is 5 more than last week's 23. The average asking price has dropped down to $1,954,000, down from $2,104,000 last week. The same number of homes went pending this week as last, and the average asking price of this week's pending homes is much higher at $2,329,000 over the $2,169,000 of last week. And 2 homes sold this week, which is less than last week's 7, but the average closing price was significantly higher as well at $2,222,000, up from the $2,010,000 of last week. So now that we know how the market performed this week, we can look at the broader trends that help us determine where the market might be heading. Before we look at those trends, if you find this information helpful, you can subscribe so you don't miss out on future updates. And why not share this with a friend as well? Everyone deserves to be in the know about their local market. All right, let's take a look at those market indicators. Inventory increased again this week. It is still under 30 homes, which is well under the typical inventory levels that we see here in San Ramon, but it is now falling in line with the average that we saw last year. This 20 to 30 house range is still a good range for the market to sit in for sellers. It keeps prices from falling while giving buyers a little more variety to choose from, which helps keep them engaged in the market. Still, not a great time to be a buyer, but if you are looking, I think it makes more sense to buy now so you don't get bit by inflating home values when rates drop. When inventory increases, it's almost expected that the turnover rate will fall below 100, typically. That has not occurred in the past few months, which tells me that there's still a lot of buyer activity in the market. We're still sitting well above 1 for the whole year, except for a few little dips here and there. Buyers are likely running into bidding wars more often than not because of the laws of supply and demand that we have going on in our market right now. The further proof of bidding wars is the over-under number. The average home in San Ramon is now closing for more than $130,000 over the asking price. That's 7.5% over asking. In a neutral market, the over-under number shouldn't be more than 2% in either direction. So this stat really does solidify that sellers are currently in more control of the market than buyers are. The average sales price has been the one housing stat that has been lagging behind with all the other seller positive stats for the past few months. But we have been expecting the average sales price to start increasing since the past few weeks of pending sales were in the $2 million range. The sales price average has finally made that jump, and we've been expecting. It's up $50,000 this week and now sits at over the $1.9 million mark. Nope, right there. I expect it to break $2 million in the coming weeks. The QQQ continued its slight downward trend that started last week, as it dropped another 1%. After months of 3 to 5% week-over-week growth, a few weeks of 1% regression isn't a strong negative indicator. We've had that 3 to 5% here. So it's not a strong negative indicator, but I think it does deserve attention. San Ramon home buyer confidence is closely tied to their portfolios, as a lot of buyers are counting on those accounts for their down payment. Any significant hit to to the tech equity sector can cause them to reconsider their plans to purchase. Interest rates continue to climb back up this week. We are now sitting at 6.88% for the national average of a 30-year fixed mortgage. Inflation continues to stay higher than the Fed is comfortable with, which will keep them from reducing rates in the foreseeable future. I think we're stuck in that 6 to 7% range for quite some time now. All the historical stats and indicators show that we have been in a very strong seller's market for the past several months, with inventory and turnover continuing to perform at the level it has been. It looks like we will be in the seller's market for a while. The one caveat I will put out there is that the two more predictive indicators that tend to help us see the future with a little more clarity is starting to shift away from highly seller positive ranges. I mean, interest rates have been high for a year, so that probably has less of a chance to hinder the market growth we've been seeing. But when you add in the slowing down of the stock market, that could give buyers pause and make the market start to soften a little. Of course, with the low inventory, it's going to take some significant negative pressure from the stock market and interest rates to really pause our market. Thanks for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the bell so that you can stay informed on how the market is shaping up this year. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below or reach out to us directly. We're here to help guide you every step of the way. Thanks for joining me. I'll see you next week with a new update.